Hi, everybody. I'm Dale Pinkert, known as Coach, and we're at TradeGateHub.com, powered by TradeView Markets. And I'm joined by Gareth Soloway. Gareth, welcome. I really appreciate your time today. And
Hey,
there aren't many times when I see some of your analysis that I don't check it out and pay attention to it and integrate it into some of my thoughts. So
mhm.
great to have you here.
Hey, thank you so much for having me, Dale, and it's a true honor to be here with you.
All right, so everyone pay attention now. Okay, so I wanted, before we get to the markets, Gareth, just maybe a quick history lesson. I usually go and ask people about their journeys, but let's keep it short. What were you doing before your first job in the industry? And then what was your first job in the industry?
So before for my first job, I was in college. I knew I wanted to be a trader ever since high school when I made fake money in a fake account in the late 90s with the
Oh, wow.
dot-com bubble. So it
Yeah,
was
yeah,
very addicting to make fake money when I didn't have a lot at that time. So I went to college for economics, thinking that was my best play to get into trading and investing. And then I went to work for MetLife, doing kind of financial planning initially.
how did you
Didn't
like cold calling?
I hated it. Oh my god. Oh. I
Here's
mean,
they give you what, a Cole's directory, Gareth, and say dial the B's today or the
yeah.
D's or the F's.
Well, you learn very quickly that all the decisions on investments come from way higher than you. So your
Yeah,
job is to just get people on the phone, right? And so after 1 year, I said that was it for me, and I had $10,000 to my name saved at that point. And I went
yeah.
to a prop firm and I said, "Hey, I want to learn to trade, and let me get started." And needless to say, it was a rough journey. I lost that 10,000 many times over and had to replenish it through working multiple side jobs.
Okay, Gareth. So, a graduate of the University of Hard Knocks, and
Right.
it's
That's
really at times the only way to learn. I don't know hardly anyone that was an overnight success. You can't read a book and do brain surgery. Why could you read a book and become a profitable trader? How
right.
long did it take you before you started making breakthroughs?
I would say for me to turn the corner, and needless to say, it's a slow journey. Meaning, like you're losing a lot, then you lose a little less, then a little less, then you're a neutral trader, and then finally you turn that corner. It probably took me a good 3+ years to get to that. I wish I had educators like yourself or myself back then. I didn't, so it was a lot of trial and error. But it took me years. People have to remember the market will make you pay, or you have to follow someone who knows what they're doing. Following someone is a lot cheaper in the long run.
Yeah, if it's the right person, you're either going to pay to learn or pay the market.
That's right.
You can't learn experience, but you can learn from the experienced.
That's right.
I've got a million of them. So that's that you knew so early was really something. I mean, I graduated college with a journalism degree, and
Mm.
all I could get in the mid 70s were jobs with insurance companies,
Oh.
and it didn't turn me on. But I had friends because I grew up in Chicago who were on the floor of the Merc,
Mhm.
and they invited me down there, and I went up to the gallery and saw guys in the pork belly pit going crazy, and I got signed on by my buddy on the floor and went around every desk and said, I don't care what you pay me, I just want to learn.
Mhm.
Yeah, so so people need to be patient with themselves.
That's right. That's right. It takes time. You have to work at it. It's not something that you just do a trade and you're like, oh, instantly I understand. Keeping a trade journal, looking over why you lost on a trade, going over that
Yeah.
multiple times. You always learn more from your losers.
Okay. Well, I want to switch gears to, you've been on fire the last few years with a lot of great calls. I mean, momentous calls. It's not easy to pick a top to an ongoing decades long bull market in equities. But I remember talking to you in January, the beginning of the year, and you showed that trend line that went all the way back with all of these major tests. Yeah, there you go. Look at that trend line. And there were things and clues telling you there was going to be a trend break. And it never looked back. It came back and retested it a couple times, but that was a great call, Gareth. I want to acknowledge that call. As long as we're here, what are you thinking from here?
So I'm in the camp that, so we know we have some big stuff coming out, the CPI data, the Federal Reserve, likely 50 basis point rate hike. So when we're talking short term, I have a neutral to positive bias on the market. That comes from this pattern here, which is basically just sideways consolidation off of this up move. So there's a difference between a micro pattern and a macro pattern. Micro reflects very near-term price action versus macro would be the bigger time frame. The micro pattern, the near term, is probably slightly positive here. You would assume that it might coincide with maybe a slight pullback in inflation or something else like that. But once we get that move up, I don't think there's a ton of upside in this market. And again, I'm kind of looking at a chart trend line, maybe something like this. Maybe this is your max upside here. And then we start to roll over. And eventually we take out these recent lows at 380 on the SPY. And I'm still in the camp, and I've said this since the beginning of the year, that I would not be surprised if by the end of this year or early 2023, we retest that pre-COVID high down there.
Yeah, and I'm not sure what kind of fib retracement that would be. Maybe it's halfway back from the COVID low or 61.8. But, at the top, you also had some clues that were telling you there was going to be a trend break. And if I recall correctly, and I talk to a lot of people and we talk every day about different markets, but I believe it was the weakness or the bubble that you saw developing in Bitcoin. That told you there was, just too much euphoria, and you've been negative on Bitcoin. And I think we're getting closer and closer to what seemed like a ridiculous target back at the beginning of the year, that we're almost there. You were looking for 20.
Yeah. So I still remember in October, I did some live interviews in Dubai, and I was talking about that, and I was at a live Bitcoin conference. So you can imagine everyone wanted to tar and feather me at that point.
Did they throw stuff at you? You were
live,
huh?
It was kind of more like the blank stare of like, am I really hearing this guy say this, or is this real life? But the bottom line is you had all the makings of a bubble, and we know that Bitcoin is a classic risk on environment asset. So if that was ready to roll over and you had the S&P 500, if we go back to the spiders here, it kept on hammering on this trend line. And what we know from trend lines is the more we hammer on a level, the weaker it becomes. Right. So we knew that. We knew the Fed was essentially going to start to pull back on quantitative easing and start to taper. So it was kind of like everything coming together. And in the S&P chart, what I love showing here is, if you looked at the beginning of this move, it was very vertical, hit and then sharp move and then a higher and a higher. And then what you got over here was kind of a more flat top. And let me get my trend tool out there. And this tells you that there was a lot more distribution going on. So it was basically smart money was starting to take it off the table. So it was just that combined with Bitcoin, combined with how many times in a row we were hitting this line, that gave us the probabilities that a break was likely coming.
Okay, so we're looking for more downside, kind of deflationary action still to come in equities, still to come in Bitcoin. Then tell me how you rationalize your bullishness, if you still are from the last time we talked, in gold and silver.
Yeah, so I think the gold and silver trade, and more so gold even, and if we bring up the gold chart here, this is just what you expect from gold, right? So let me erase this trend line here, get this out of the way so we clean it up a little bit. But basically you had this longer term breakout here on gold. Yeah. Okay. And then you went to right at double top. So double top is a classic resistance. We pulled back. We did the classic retrace to the scene of the crime play right here, which is you're retracing to home base. And now you've moved up and you're starting to make bullish consolidation. So I'm in the camp that, number one, gold is still positive for the year in spite of the DXY, the dollar, just being absolutely ripping higher, right? I mean, this was where the dollar was at the start of the year. So, I mean, usually the gold will go opposite the dollar, but instead
it rallied with the dollar.
That's
strength.
Right.
Yeah.
So
till the last month.
Right. So. Exactly. So the fact that you have a strong dollar and you still held up on gold tells you that money flow continues to accumulate. The chart itself on gold continues to tell us that that as long as the breakout holds here, this downsloping trend line, and you're making this factor, I got to believe you're still in this inflationary environment where gold has quite a bit of upside to go. So again, it's kind of the perfect asset. If you compare it to the S&P, if you compare it to Bitcoin, it has been, I mean, you haven't made a fortune on gold, but you haven't lost 20% like the S&P or 50% like Bitcoin.
Okay, and you think it's going to put in higher lows despite the S&P is going back to post pre-COVID highs and Bitcoin going to 20 grand. So then I have to take you back to the dollar. I've always contended that there are exceptions, like it went up with the dollar for a while, but it always, I think it's more of a monetary hedge than an inflation hedge. And I think that a bear market in the dollar has to be the jet fuel for there to be, especially in silver, Gareth, and I want to go to the silver after this. So is this rally we're getting in the dollar right here going to be a failing rally? That's my bet.
Yeah, I think it is as well. I mean, it's just hard to imagine. I mean, right now you have a lot of kind of unease globally, geopolitical stuff going on. We know Russia and Ukraine, that whole situation is still unfolding. So it makes global money want to find the safety of the dollar, and that keeps this bid in the dollar going. But as time progresses, I do believe that we'll start to see that fade. We've already seen the digital yuan starting to take over. There are transactions going on now in that form by more and more countries. And I do think that over time, the dollar will become less and less of a stable reserve currency. And ultimately, that's a huge bullish scenario for the dollar, for the gold chart.
Okay, and do you think that the fundamental paradigm shift was freezing Russia out of the monetary system, of the SWIFT system, so that nations all over the world probably have a harder time going to sleep at night, knowing that the U.S. has, not that they have the power, but they would exercise that power and freeze all your assets?
Yeah, I do think that was another nail and maybe multiple nails in the coffin. I do think that the track we've been on, like the Chinese introduced the digital yuan long before that, and there's no denying that China wants their currency to be the reserve currency. So you've had this
trade that anywhere, Gareth? Can you trade the digital yuan anywhere?
Not that I'm aware of, but I would love to see an ETF on it at some point. I know it's controlled by the government a little bit, which also makes it a little problematic, but certainly that would be a cool thing to see in the future. But the bottom line is the dollar has been on this path for a long time. There's, Iran has wanted to do trades outside of the dollar for long periods of time. I mean, so it's been something that's kind of been occurring for a long period.
Hegemony ending.
Yes, but I do think it's been sped up by the recent events. There's no doubt about it. Other countries are like, okay, listen, we have to be a little bit more aware of this now.
Okay, so let's go to the silver chart, please. Yeah. And I remember the last time I spoke to you, you're a bullish silver, and I said, well, hold on a second, Gareth, we have to clean out the stops under 2140.
Yep.
We
sure did that, didn't we?
Yeah. So, that's happened. I think that's an important low, or at least a place to be wrong. If you buy this break here, would you be buying this pullback in silver that we're getting here?
I have picked up some. I am a realist in that, there is a chance that we could go and retest this area down here on the silver chart. But for me, I think when I'm looking to invest, so there's the difference of swing trading versus a longer term trajectory of a year, let's say, out or more. And I think that even if we dip down to 19 from here, you just used it as an accumulation zone, because again, if you're in the camp that the dollar eventually will decline in value, gold and silver will be a key place where you'll get major runs. And I think you would agree with this, is that if you look at this low from March of 2020 to this high, even, this is all inside bar. It's not pretty. It's not nice.
It's looking. Ugly. It's messy. It's corrective.
It is absolutely, but it is digestion. It is digestion of the big up move here. And so I do think this ultimately leads to another leg higher. And what you could do is you could actually do a measured move where you take this low here and this high. And then when you do get that break, that would give you a target to the upside of that distance.
That'd be $46.
About? Yeah, I believe so. 20, 11 and change to 30, we'll call it. Yeah.
Okay, well, nice looking chart. I'd like to maybe switch gears with what's happening here in the metals to perhaps finally the most unloved market, except people are trying to bottom pick bonds
Bonds.
right here. And I've been saying this last rally that we had, say, in TLT. Oh, you want to start with the 10-year? Okay. We could start there, but I think the longer end of the market is weaker than the short end of the market. And if TLT breaks 112, if you just want to bring that up, I mean, looks like depending upon the number, that we're going to new lows, 110, 112.
Yeah.
And this is kind of the acid test for everything that's rallied lately in the last month or so, isn't it, Gareth? Because how things hold up
Yeah,
on
I
this?
agree.
Yeah, go ahead.
I know. I think you're 100% right. Is that everything about how the performance of all assets are going to go? It's all going to be tied to the bond market at this point and what interest rates are doing. Everything comes back to square one, which is interest rates. And yeah, I agree 100% that this is going to be the litmus test for the markets.
So a lot of things coming up to see the catalyst, the CPI, then the Fed next week, and I know something that Nick probably talks about, the solstice coming up as well. So what are your best candidates for inflection points going into this time frame?
Yeah, so I think for me, this could be a scenario where we get a little bit of short-term upside in the markets over the next week or so, and then you see that reversal around the solstice kind of thing. I think that could be a very good possibility. It does seem like the markets are getting a little bit more complacent again. Even though we haven't had much of a rally, it's just kind of been a quieter market than what we've been experiencing. So for me, what I'm looking to do is I've had some long tech trades on that have been nice. You know, they're in the money. I've taken some off the table, but I'm still having some on. And then I'm going to look to rotate out of those. I also think oil is going to be one of the most amazing downside moves here.
Okay, because I'm trying to top pick it now. And I think it may have been, I think we got to what, 78.6 yesterday. Compared to the prior high. Yeah. So tell me what, I've been asking people, maybe you could answer it. Now, I believe in the technical formation, but I ask everyone, what fundamental could possibly take the crude back down to $80 and no one can come up with a reason? Can you?
Yeah. So number one is when no one can come up with a reason, that's usually why it happens. There's something that pops up. It's when everyone is focusing and saying, oh, well, it's going to be this, or it never is that, right? So I mean, if you do want to look for a reason, you could say something that no one expects, like maybe all of a sudden Russia decides that, hey, we are going to back out, or maybe there's a peace deal. Maybe Putin gets overthrown. I mean, you just don't know. But what I do know is that it's very rare for oil to stay up here going into midterm elections. Historically, there's usually a sharp downside move. In addition, you have to look at what's going on with the price of oil and demand destruction. So, now you're looking at people filling up their gas tanks and it's costing them $120 to fill up their gas. Maybe
they're still going to take vacations, though. They've been locked up 2 years.
Right.
Are you going to give up, after being a prisoner for 2 years, paying $2 more a gallon and not take a trip?
No, I certainly, but I'm in a better position than many Americans are. And I think you have to, and it's not so much the trip, right? So they might budget $400, $500 for that trip, 1,000 miles. But the question is, are they going to start saying, you know what? I was going to go shopping the next 3 days. Let me combine that into one trip. Let me not go out constantly to grab something from the grocery store. It's the smaller things that start to add up. And then maybe let's not plan that trip for 6 months from now because it's going to cost too much as well. But I agree. People want to get out right now. I don't blame them. I'm the same way. But and if they already planned it and scheduled it and paid for that vacation, they're going to take it. It's about the future vacations at this point, I think.
Okay. I think the recent pop has been about optimism of a reopening in China. What if they have to lock down again?
Oh, then right away you'll see that reaction to the downside. But this is what's so amazing about the markets is that you get these scenarios where, all the talking heads are bullish on oil, and then you'll wake up one
We're
morning and
talking heads,
well, yes, we are,
aren't
but
we?
I like to believe we're truth sayers. We don't we
Okay.
don't we don't
We're we're watchmen.
That's
How's
right.
that?
That's
Watchmen.
right.
Yeah, we're beware, beware. We're
Yeah. We try to tell it like it is, not what people want to hear. And I think that's important. And
yeah,
again, just in my trading career, is that when you have too many bulls on one side of a trade, inevitably that trade will falter. And the more bullish you get, I mean, think about Bitcoin at 65,000.
yeah.
You couldn't find anyone but me really that was bearish on Bitcoin up there. And look at what Bitcoin did. And oil is the same way. You have all these mutual funds, these pension funds, these hedge funds.
Yeah.
Everyone's piling into these names, and you're getting these ridiculous moves up. And the small investor is getting pushed by talking heads to get into these trades. And again, just to
Late.
use this as an example, look at ExxonMobil. I mean, people are buying in here on ExxonMobil after just this year. It's up from $60 overall. I mean, it's almost up 100% on the year.
Yeah.
And people are buying into it. But if you look at the technical chart, you got a perfect double top here.
Wow. 2014.
Yeah. So, I mean, to me,
Yeah,
that's like,
that's when
okay,
oil was 140.
right.
Yeah.
Right. So you
Okay.
have that. In addition, I think let me just go to this again. I want to just take a look at my RSI because I thought I saw a negative divergence on the RSI here. Let me take a peek here. Yeah. So this is something that I pay attention to. And it's important to understand that RSIs don't dictate immediate price action, but it tells you something is coming. And what I want to show you guys,
Yeah.
what's that?
Yeah. It's been diverging for 4 years.
Yeah. So since 2022 or the beginning of the year, you have price going up,
Yeah.
but the RSI is making lower highs. And that to me tells me, it doesn't tell me it's going to roll over today or tomorrow, but it certainly tells me that something is in the works here that's going to change the narrative that everyone's talking about of oil just being the best thing, and it's going to go to 150 or 200, and it likely will see a reversal back down. So there's lots of signals out there. Double top on Exxon, negative divergence here, overzealous buyers, too many bullish players out there. So I actually am short oil right now. I'll admit it. I am short oil up here. And I'm looking for a pullback.
Where are you wrong? Do you get out of the way at new highs over 131?
Yeah, so I think a confirmation move above that high.
Okay, you're short Exxon or
I'm short Exxon, and I also have some SCO. So SCO, you can't really analyze that chart because it's a double ETF.
Oh yeah, I know. Before they did a reverse split, I traded it.
Yeah,
okay,
yeah. So right up here, I would be watching this 130 level, the high on crude oil at 130. I don't mind a pierce of that level because that could just be a double top. But if it stays above there for a couple days, that would be concerning to me. Absolutely.
Okay, and you have even bigger divergence here, but we're not at new highs, so you can't call it a divergence. So how about, I think we've covered almost everything that I wanted to talk to you about. And it seems like we're on the same page on a lot of things. I just copy everything you do,
man. I think it's great minds think alike. Yeah.
And I really love your charts, your technical work. And is there anything you want to wrap with? We've covered the gamut.
Yeah, we really have. I think that's really about it. Is I just always like to caution viewers to, when you hear everyone saying something and everyone's talking about this being the next thing, always think for yourself and take a step back and just remind yourself, if everyone's heard this, like bullish oil or bullish Bitcoin back in November, then who's left to buy if everyone's in that wants to be in at that point? So eventually the sellers take over. And I think that, you want to kind of be somewhat of a contrarian investor at extremes, not necessarily intra moves, but at extremes. So just be careful out there. We're in a bear market. We're going to go lower. Buys can be great if you're in and out quickly, but again, be careful.
Okay. Great words. And from a guy who's earned it, who didn't come easy, had to get off the mat a few times after being knocked down. And, I like to say this, Gareth, that to be a good trader, first of all, you have to learn to survive, and it's hard work, and you have to live through adversity. And if that scares you, do something else.
That's right. So true.
So my Trading Warrior brother, great interview, and look forward to seeing what manifests here in the markets, and really appreciate your time. Best way for people to follow you, I mean, you're everywhere now on most YouTube networks, is on Twitter at Gareth Soloway. Is that it?
Yeah, that's it right there. So that's where you'll get my tweets live coming through, and then if you want to check out my big crypto website, it's verifiedinvestingcrypto.com, and then stock site is inthemoneystocks.com.
And where they have a great team, Nick Santiago, and Nick, always love talking to him too, and it's great to have a team.
Yes, it is.
And great having you, Gareth, my Trading Warrior brother. Appreciate it.
Thank you so much, Dale. Have a wonderful day.
All right. Good hunting, buddy. That's a wrap. Gareth Soloway, everybody. Watch this again. You'll have a good summer. Take it easy, buddy.
All right. Thank you so much.
All right, Gareth.
Have
Appreciate
a good one.
Your views. Thanks for sharing your hard work with us.
Thanks for having me on. I look forward to our next chat.
Okay, buddy.
Bye-bye.
Adios.